Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone 1 minute past midday. Actually made it on in smooth, quick style today, making it just gone now 2 minutes past 1100 UTC. A really big shout out to all of you watching this live today, as well as everybody that's been watching this on catch up. It's been a pleasure to have 3,000, 5,000, 6,000 of you sometimes on these shows recently, which is a real blessing, and I do appreciate every single one of you. Evil Gemini, our friend Bern, Craigie Boy, Nit, how are we doing front and center? Apologies if you can hear some noise, a little bit of scrubbing today, guys. The place is getting redecorated externally, so the lovely office windows and everything appear to have been a target for this morning. So, how are we all doing? Shire, how are we doing, my friend? Good to see you. Got a really packed show today. Obviously, there's a lot going on at the moment, a lot to decant, a lot of bullish signals coming through, a lot of people starting to turn a little bit bearish. So just want to kind of strip away the noise, really, and see where we are overall. NBA Young Believe, how are we doing, my brother? So this young man caught, put out on Twitter a beautiful trade at the weekend, trading the inside bar pattern. Real hard-working young guy. Love to see people like this doing well. So if you want to know more about that pattern, you can find it on my Twitter profile. You can see some of the recent tweets as well. One from NBA Young Believe himself, who put on there exactly when he was entering markets, chasing down the mother bar high, which we'll cover in a moment, actually, because we've seen that pattern failure, price climbing back in the range at the moment. So we're going to just take a look at where we are. But first of all today, while a few of you come in, I wanted to start with the NASDAQ. Now, as a lot of you will know, we can get a lot of confluence from equity markets, from indexes, from, everything from the DXY through to gold, oil, etc. Now, for me, I'm really trying not to overcomplicate things. If I'm looking just purely with my crypto head on, and not as a traditional market trader, one of the first things I'm looking at down here to just get a little early sense of whether we're in a risk on or risk off environment. Typically low gold, DXY, we're going to discuss this a little bit more later because the drivers for the DXY are a little bit different at the moment because of what's going on with the US economy. However, DXY, typically you want to see that flat, but we can also see here as well the volatility index, the VIX, right? Now, obviously it doesn't look like much on a 4-hour scale, but we can see how we've gapped up this morning, right? So from pre-market, price came back down to below the 20 level. Typically, with risk assets, you want to see the VIX falling or at a low level, right? I'm not going to go into all the details of this, but this is a measure of like the S&P 500. They're looking at options contracts. And basically, when you see these huge spikes, it typically means that you're looking to move to a little bit of a risk-off position here. This just means that there's a lot of puts opening in the market. So a lot of people obviously getting ready, either people taking profit, covering, but also you've got to be looking at this as concern. If you want to check these things out, obviously it's super important to know when the correlation is in and when it's not. These things aren't always correlated, right? If we just put Bitcoin's price on here, for example. Wait for TradingView to fire that one up this morning. Right, now we can just see here, again, very simple graph, but especially if I change this to a line graph as well. right? Look, we can see here really clearly what's going on. We can see the VIX dropping here, dropping, and we can see the prosperity that we've had in Bitcoin. This would be the same with risk markets as well. We would look at that. We would add, for example, the NASDAQ. As you can see here, VIX rising sharply here. Yeah, and we see the pullback here on Bitcoin. Again, the same with risk assets, okay? So just to kind of paint a very, very broad picture of it, there's a lot of other things that we take into consideration. Obviously, we're in a very fundamentally driven market at the moment, meaning that news is affecting the market with very, very high impact. Any Trump, tweets from Trump, for example, news such as things that come in from the Federal Reserve will always hold with them volatility. But we also need to understand how to trade the news, because a lot of the information is priced in on the preliminary data. Okay, so while we're not going to go into that in too much detail today, we've got a lot to cover for crypto. I know the show is full of you wonderful degens, so I won't go over that too much. However, at a snapshot, I want to see prosperous risk markets. All right, so if I'm looking at the NASDAQ today, for example, now, we need to remember I'm looking at this on a higher time frame view, but I'm also looking at this personally every day in terms of intraday, which I don't typically share on these shows, just because a lot of the information goes very quickly and most of you don't have access or, the time to trade intraday. So we're looking at this more from a swing and positional point of view, okay? Now, as we can see, we had a really, really strong market heading up through here, beginning of May. Ultimately, we're just looking at a consolidation here. If we draw out to the weekly again, we can see we had a beautiful reaction here, right, at this key kind of pivot or support resistance, key resistance through here. Price came back into this area, really carved through it, right? And I covered this on the previous show. And again, I'm going to kind of reiterate it today. Look at these previous consolidations, right, that led to these larger moves. So, for example, we can see this one here, yeah? So if we take that and we move that across here, what you want to see in here, right, is something bullish. So what do I mean by that? Well, you would typically expect, right? Let's clear that up a minute. You would typically expect when price gets to this area here to see an initial rejection, which we did. If we look at the actual consolidation here, if we look at the up close candles that came in before this large drop, and we just label them up and draw them across, we can see how this area offered resistance. All right, so let's forget about this SR level for the moment. All right. Even if you're just looking at this, right, and just doing something like this, just taking the very high of that and drawing it across, this is a key battleground for the bulls to recover, okay? Yes, we've had bullish price action to here, but ultimately we're just coming into an area of supply, all right? Demand down here, supply up here. This is how ranges are formed. So on a weekly scale, remember how long this period has been, right? This consolidation was back from December 2021. Return to this area here, selling was very strong. So it's a really, really good place to cover. It's a good place to take profit. So that's why we look at these areas keenly. Now, until proven otherwise, this is resistance. So what happened here? We saw this strong expansion higher, right? So this beautiful expansion here. Then we saw this bullish gap being left, meaning this gives us an area that we can start to look for long positions. Of course, you can look for long positions down here. There's a number of different ways to do it, right? You can look at this, for example, key breakout of a trend line here after liquidity was swept. You can see the strong expansion here, almost like a three white soldiers pattern, but not quite. It would have been nice to see this as kind of like a morning star pattern, right? But we would have needed this candle to be a doji. But either way, you can see we've got a beautiful big bullish engulfing candle here, closes above this level of resistance. All right, what else have we got here? Yeah, you could label this up like this as well, right? So you've got a falling wedge, a bull flag, however you want to put it, strong breakout, but into resistance. So what we want to see in here is if you're going to be positioning into this area, I want to highlight where the key liquidity is resting, which is here. And by the way, guys, this is completely relevant for crypto, everything as well, all right? So as we look at this here, go up into here, and then price starts to sell off. All right. So we see that in just these little pullbacks. We've got these dojis here, and then price expands a little bit higher. So as we are, right, then as we can see, falling wedge, bull flag, however you want to put it across, yeah, then that's where we are. So we've had the expansion into resistance. You want to be positioning yourself here or on the retest of this level. But ultimately, you want to be a little bit cautious in here until you see the big expansions. And this works across all the different time frames. Now, when we've seen this for me becomes an area of mitigation, right? Because what it means is if you're looking at this as you draw it across, and people that were short here, people that were short here, anybody that's still in these positions, well, when this happens here, you see that expansion come higher. The drawback to this level here, when the odds are massively in the favor of people continuing to move long, this area here becomes really, really key, because it's telling you that where the sellers were in control, the buyers have now taken over, meaning that any pullback towards this area allows anybody that was short within here to get out of their positions at minimal loss, right? Or sometimes at break even, before then jumping on with the trend. Ultimately, we can see as price kind of recovered structure down here, this consolidation leading to a large pump, consolidation, large pump, consolidation. We then just flew price up to here. So as we're looking at all of that anyway, just put that back and get our support and resistance level back. The same thing with this level here. This was the key. This was the high. This was the area price was wicking into, all right? When we saw that strong move above it, gave us the extra confidence to go long. So the nice support that we found down here, pushing markets higher, was a key area of interest. Now we have come above this here, right? Which again, for me, is a good point of interest. Why? Because this was the high wick that saw a strong rejection lower. We've now recovered that, and we've had a really strong body close above here. So on the NASDAQ, the area around 20,536.75 is an area that I'm interested in. You might be thinking, why so much on the NASDAQ at the moment, BC? We really want to look at crypto, which we're going to come on to. But just remember, right, how correlated these markets are, okay, especially at the moment. If we go onto a daily chart again, we want to overlay Bitcoin. I mean, look at what you're seeing here. This is the NASDAQ, the price action coming in the candlesticks. Again, we can move this back to a line, right? Yeah, you can see pretty clearly here, you know, forget the gap between them. Ultimately, these things are grinding up together, consolidating together, correcting together, or breaking down together, and then recovering together. Can even see today the correlation here as price just starts to come back here, all right, on Bitcoin, and we see the same with the NASDAQ, Bitcoin here and the NASDAQ here. So as we're looking at that, let's get back to our candlestick charts, and we'll get that off. This is a key area for me to hold. Now, if I'm expecting a corrective move in the indexes, like the risk assets, remember that the NASDAQ, the S&P 500, the Dow Jones even, right? But the S&P 500 and especially the NASDAQ are full of more technology stocks. It shows an investor's appetite for risk. And with crypto being basically like a beta risk asset, that's what we want to see. We want to see an environment where investors are willing to deploy their capital into risk assets. And then we lay the foundation and we look at this being a really good potential opportunity for Bitcoin. All right, so that's what we're looking at there. Now, the dollar index is something that we take a look at quite closely as well. I'm looking at this more in terms of ranges. We can see we got the rejection from the midline of here, closed back below. We're now back within this range here, and we can see it's been a real big fall here for the dollar index. This is the dollar measured against a basket of other currencies that's slightly more weighted towards the euro. Okay, so as we see up here, since price came into here and we broke market structure, we've just been grinding down here on the dollar. Now, normally what we would do is we would overlay exactly the same way as we've done before, but we can see if we put Bitcoin on here, make this one thicker this time. I think probably stands out a bit easier for you guys. Yeah, we can see that actually they've really kind of been flying in and out, right? Look at what happened when we put the NASDAQ and we put Bitcoin on the same chart together. We saw that, you know, to give an example of it, we saw as one was clearly grinding up, the other one at points of correlation was going down, so we had one going up, one going down. Now, what we can see here is it's a lot messier, right? And that's because there's slightly different drivers at the moment, but we have seen this key separation here, right? When we saw this large downward move here, and then we saw the spike here, right, in Bitcoin. So as we're looking at this here, it hasn't been the most reliable. The reason for that are the economic drivers that are driving the dollar lower. The US want the dollar to be driven lower. Seems counterintuitive, but it's very, very good for trade. I know we've had the tariffs and everything, but the positioning isn't exactly, I think, what everybody expects. So, you know, part of it is looking to get people around the negotiating table probably, but ultimately, you know, a big part of this is the US trying to exert control back over China again. I think a little bit of concerns over how much control they have in technology these days, what a threat they are to the US major companies, especially, you know, what they call the Magnificent Seven, things, you know, made up with like Microsoft, Tesla, etc. These massive, massive corporations, these very tech heavy companies, or these tech companies that make up such a large part of things like the S&P 500 and the NASDAQ. Are under threat by Chinese tech and the development of Chinese tech. We saw it with the impact with AI, with what came out with DeepSeek, all right? So this is where we are, all right? The dollar, we still want to keep an eye on that. Ultimately, the dollar is seen as a little bit of a safe haven along with bond markets, right? So typically, you know, if you're getting a good bond yield, which you can get on the long end of the curve at the moment and kind of middle as well, then it's just a little bit, you know, it's quite encouraging for funds to put their money in there. If the environment isn't particularly good for risk, then you're taking a lot of risk on those assets and you face, you know, obviously not the greatest risk profile. And when you're a major fund or you're someone, you typically will have to get it past a risk manager, which I had to do when I was at Neuer in Germany. And yeah, if we just think about these things a little bit, all we're trying to do is paint this picture of saying, okay, is it a good time to be long risk assets at the moment, and is it not? Well, we can see overall that the market is actually pretty prosperous. We can see that the risk markets are looking pretty good. The dollar's weak. We can see as we go here back to the VIX, we can see although we've gapped up here, we want to see the VIX starting to pull back here. We're down below 20, which is a really good level. Ultimately, the VIX grinding down here will paint a good picture for risk assets. Typically, gold, which has been in a little bit of a world of its own, you know, we've been short gold from here, but, you know, mostly just off the basis that a deeper corrective move is priced in my opinion. What we're looking at here is, you know, an asset that has just had a mammoth run since the end of last year. A really, really, really good haven in uncertain market conditions is gold. All right, so we've seen that really, really thrive. Okay, so all of that out of the way, let's get ourselves on to Bitcoin. All right, so we can see what we're going to take a look at in a minute. I'm going to pop onto that. Let me just hide that away for a second. So we can just take a look at where we are here on the weekly. So on the weekly, price is obviously super strong here. Now, since we broke out of here, all right, that was the week starting the 21st of April. We took liquidity from some lows. We can see with these long wicks all coming into this area. For example, let's look at the low of this wick here. Look how price just wasn't able to close any bodies below that. We saw 1, 2, 3 weekly candles wick into this area and recover. So when we saw this strong expansion here, taking out this high, but also setting this order block, so these two bearish or down close candles here, you know, that's where the selling was done that drove price into this level. Price is now broken out of that. So we're looking at this area that buyers now control. So we're looking for this to hold. So ultimately 1, 2, 3, 4 weeks of being risk on. All right. Now, again, this was a key area for me. I highlighted this in last night's Bitcoin report. You can see that. Any members over the Bird Nest get that. I also shared a couple of the time frames on Twitter last night, saying why this area is key for me. There's something else we need to add to the chart here on a weekly scale, which is we have this lower weekly gap now, right? The key thing about this, same as this gap here, this wasn't filled. These inefficiencies, which show basically aggressive, you know, moves up, a lot of buying pressure, or, you know, a lot of buyers stepping in, or it doesn't have to be buyers, but large buy volume company. It could just be a small collection of buyers just with a large amount of capital to deploy, have run the markets up aggressively. Now, when you see inefficient action, you see all these bodies and wicks, they all cross over. We don't have any gaps. Well, look at the gaps that we had down here, right? The market at some point likes to rebalance these gaps. We can see this one was rebalanced over here. Then we saw a deeper move down to rebalance this gap here. So markets do like to be efficient. That's why these are called inefficiencies. So I think this is where price could be getting drawn today. Now, the purple area that we can see on the charts here, right, is really, really key, because as I was talking to you about before about areas of mitigation or prior consolidations, we want to see how price reacts. This was the move that led to this big sell-off, right? Price saw a rejection here and a rejection here. Again, look at how the bodies, just focusing on the bodies of these two candles here, these two bullish candles. Why? Because that became the bearish order block when price closed below. This was the first retest. Price tried again. Look how the wicks came in and then immediately rejected outside. So for me, I think this is super bullish. Big, massive candle closed through this whole area, and then price wicked back down into it, and we left this bullish hammer candle, right? So for me, if I'm looking at these in terms of candles, patterns, this, again, it's got all the bullish connotations you want to see. Large, big-bodied expansion candles. This is a beautiful bullish hammer candle, or a pin bar with a very, very short nose at the top. Now, just because I'm bullish this week, and again, the targets are here, we're looking at all-times high 109,998.9 here on OKX, right? Doesn't mean that we're just going to do this. It doesn't mean we start the week and we go, yay, everybody wins, right? Markets don't really work like that. Sometimes they will, which is why you got to have a plan to trade them both ways. But something like this, for example, something like that I like. And why do I like something like that? Well, it makes sense. The week starts very bullish. People want to step into the market. A lot of people chasing this. People may be getting late, long over the weekend, seeing that Sunday pump. What happens? Saw the timelines on Twitter. People just going mental for it. Oh my God, massive pump coming in. Actually, one of my favorite people in the space and a guy that I really couldn't have more respect for, Scott Melchior. We had a bit of a laugh on Twitter yesterday. He put a really good post out just saying, don't trust Sunday pumps. Obviously, as this happened, he was like, oh, okay, and a few people were like, this is going to moon. And then look what happened right away after it, right? Okay, so again, time in the market sometimes, or all the time, can't be replaced by money in the market. So we could be seeing a move down here. Now, I like the untapped liquidity we've got below these lows. And again, there's a big inefficiency drawing price down into here. We did have, I believe, if we look down here, a retest of this. Hang on a second, let me just open the window and try not to get all the plants destroyed like last time. If anyone was on the live show last week, was letting a fly out of the window like I just did then, and we had a really windy day and it just obliterated the plants and pictures that I've got in the office. No such dramas today. So again, looking at the same principles here, what happens? This is the order book, this is the bullish area, this is the consolidation before the expansion. Price closed above here. Yes, it was a doji candle. We did get a beautiful retest before this expansion. So what would I be looking at? Well, I'd be looking for price again to kind of follow this plan, draw back down to this area, seek liquidity below these lows, and then we look for a recovery up to these levels up here. To break it down into our most granular fashion, we're going to look at the inside bar in a moment. All right, I did say what we want to be looking for here, more intraday plays or short-term plays, is this, right? Here is the order block. Price had this move higher. I said, don't ape into positions up here. It's just not the place to do it. Wait to see how price reacts here. What do we get? Beautiful reaction. This is where we were looking to get long from here and from here. All right. Price wicked in. Nice recovery. Ultimately some nice, short-term trades in there, and the rest just getting stopped at evens. Why? Because we saw this strong rejection down. Henceforth, why Scott was absolutely right in saying don't trust those Sunday pumps. All right, very, very different. You've got to look at the time frames you're approaching these things on. For me, as an intraday scalper, there's plenty of price action in here for me to get involved, from the lows to the highs, and also from the highs back down to the lows. We didn't take the shorts yesterday, by the way, but the long positions were absolutely in the money. So now I said what we really, really need to see is this area hold, right? And it hasn't. So we've now inverted this, and we've invalidated this order block here. So now as we look for this, we've seen where we were targeting. We closed below here and we said we target these lows first, and ultimately these lows drawing down to the higher time frame gap, which is the gray area here. Now, unfortunately, this candle did all of it for us. It came back down, took the initial liquidity targets, and then sat in here. So now what we're looking at, all right, is we just want to see this and how this develops. We've got a long wick to the downside here, which shows a lot of absorption. So I'm kind of watching cautiously today to see how it plays out. And, realistically, what you want to be seeing if you're taking out any of these lows, and this is the hourly here, so the lowest I'd be willing to go for any kind of swings, is I'd really want to see some really key recoveries within this, all right? And I mean that in terms of like patterns. For example, a reversal of something like this, So this 3 candle pattern in here, which is an evening star, what do we get? You get a large expansion candle, bullish candle here, a doji candle, yeah? And then you see a good body expansion candle here that comes down to take out the 50% of this. Ultimately, what do you get then? Price sells off lower. All right, some old school candle patterns, you really can't beat them sometimes. They're not things that you're going to find all the time, right? And they don't obviously work all the time. If you understand them, you understand their level of success. I think the morning and evening stars are patterns that are up in the kind of high 60% success rate, okay? Anyway, by the by, we don't need to drop any lower than this, but again, I'm not really seeing the patterns I would want to see here, so I have to kind of pay my respects here to the 4 hour. And the problem I've got here with the 4 hour at the moment is this is okay. This would obviously be more of a hanging man candle if it was a resistance, but this is looking quite bullish now. We've got a long tail wick down, price expands higher, nice body on this, short nose, looks like price wants to push up. So the first point for me that I'm going to get interested here is, well, 2 areas really. If this candle closes as it is, let me move this out of the way. Right, then we have a very, very thin gap here. All right, just going to do this in red to show that it's a bearish gap. What I want to see here is price to close above both of these, and then I look for retests here to get along, okay? Because otherwise I'm going to have to wait for price to close above the body of this to really show me that it's back on track. But look, when we're looking at this on the 4 hour, let's not forget, ultimately we're just within a range, yeah? I'm going to harness my inner like Raz and my boy Follis, who are just exceptional with this. They'll probably kick my ass. I'm not the best with these, right? But targeting the consolidation after the massive pump, looking at this to be the range, yeah? And, you know, what are you looking for here? Okay, it's quite a tight range, but ultimately what happened when price stepped back in this, it went to the far side, came back in, perfect retest, sold off to here, found support. Deviation, back inside, retest of the value area low, price pumps to the high. Deviations of the highs back down to the lows, can't close below the lows, back to the highs. This would have been a tricky one because a strong close above this, taking out all these highs, looking at this area to hold as support, and it doesn't. Price obviously comes back down. But what we can see is, again, the value area low is currently doing its job, holding price in here. But this just gives us a really good depiction of what a tight little range we're in now. If we were looking at this from another perspective and you just want to draw a manual range, then you've got a lot of data in here. So you can just say to yourself, all right, where's the key kind of level that's capping the market? I would say something like that. All right. And then looking at the lows here, I'd probably be looking at something like this. All right. Clean low to clean high. Yeah. First engagement, second engagement, third. Deviation back in, pumps to the high. Deviation, price back in the range. Now looking for it to take out the lows. Okay. Now there's one more type of range that I just want to go over. With this, I had a lot of requests about this, all right, so henceforth why just spending a little bit of time going over the principles of it, right, rather than just kind of focusing on this is where I want to buy, where I want to sell, etc., is the inside bar, right? Now again, you can find this tagged to the top of my Twitter profile. This was exactly almost the post that was put out saying that. Let's have a look. So just showing basically the concerns here about the decreasing volume. Yes, we had this little spike, but that's, you know, for the breakout. If you look at these, ultimately you've just got decreasing highs here. So, you know, if you want to see a strong breakout of this here, what you really want to see is price increasing. So if we look at the consolidation here and you look at the volume, right? Small volume, slightly higher, 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 higher. And that's not even broken out yet, but look at how that's the opposite, right? Into the breakout that we were seeing here. We get it so it looks nice and neat for you guys, right? Look. So rising volume coming in here. Falling volume here. All right. Now look, I'm no volume expert, right? But that's exactly what we're looking at. Burnside, I don't really trade with any indicators actually, mate. I test a lot for people. I don't really use many of these. I use Bird Nest, TBN, right? Look, trailer on TBN kept us bullish all the way through this, all panic removed. I also use it for divergences because it works out divergences based across a number of different indicators. It's not just one, right? I mean, it's just basically a standalone trading system, right? So this is one that I use, all right, and I use this all the time. We can see here with the divergences how good it is. You come into an area of key support, liquidity sweep. Look how we did the same here. Divergence, caught the move up. Divergence, caught the move up. These ones here, when you're in an established trend, so you're just over the bullish trailer here, right? What you're looking for is these divergences here to catch the pullbacks. While the trailer's supporting you, use these in order to get yourself positioned. And look, we've got another one about to confirm today, 73%. All right. So that's definitely something I look at. These are often bits and pieces that I test to put systems into different bots, as well as for other people and traders that I work with. And also I have a couple on here that have been made for me by wonderful people within our group as well. But yeah, look, we just realign this to here. We can see what happened. Consolidation down, so price is moving down to see how volume's moving up. Then we get a nice breakout here. You know, we could have been in, use Confluence, set the bullish order block here, looking for longs from here. This is why I was a little bit skeptical of this, right? Look at the staircase pattern of the volume down. Not the only reason, but definitely a very, very good one. Anyway, that aside, let's focus on the inside bar pattern. The inside bar, I'll cover it very, very quickly, right, is a top to bottom of the large candle. It's confirmed when the second candle here closes without the high or the low, breaching the high or low of the previous candle. We then get two ranges, the mother bar range, which is the high to the low of this candle, and the inside bar range here, the namesake for which the pattern is, obviously named after. Then we've got, this is the inside bar pattern. What we saw here was when price did this, just swept the low of this very much, then we got a long downside wick. I said we're trading this to the inside bar high and the mother bar high. You know, if you want to check into this stuff, you can go and have a little look through my Twitter profile. I do try and tweet as much as I can, especially with some information for you guys. But obviously running a very, very busy trading desk and trading team over at the Bird Nest, I don't always manage to get everything out, but you do get complete access to all of my TA as well as the team. If you are interested, you can find information down in the description on how you can join us. So what's my expectation now? Well, like with any range, right? Deviation of the high, price comes back in the range, looking for it to run the lows. Okay, what happened here? Deviate the low, close back in here, and this is the one to the high. That's why NBA Young Believe, who's on the show with us today, actually caught a really, really good trade, as we can see from the comment earlier, right? Awesome trade, focusing on using the inside bar pattern, right? It's a good classical pattern. It's a sign that the markets are consolidating, all right? And when the markets go into a point of consolidation, then we start to range, right? And then when we range, we want to focus on mean reversion. Let's just take another look here, just so we can see pure recency. What do we have here? Right, I'm just going to do it in this color, right? But look, there's your mother bar. There's your inside bar. Right, look at how it just formed a range. Sweeps the lows, up to the highs, deviation, back in, back down to the lows of the inner range, breakout here, perfect retest, effing perfect, price rips. All right, so the whole point is it's just a sign that the market's starting to slow down. And when the market's slowed down, bearing in mind that the market spends 70% of their time, give or take, in a point of consolidation rather than trending, that's when we can get our mean reversion systems firing. So let me just pop this off for a moment and then just going to pop this down to the 4 hour here. So how are we looking to trade this? Well, what we can see down here is that the likely target for me now is the inside bar low. If we don't sweep either of these liquidity pools and break out above this, then I'm giga bullish for the highs. Yeah. Any retest there, and I'm going in full size, attacking the all-time high, and then I think quite far above it. Let me just have a very quick look at the questions, because I have missed a few, and then we're going to rip through a load of alts. And if you've got any you want me to look at, please do let me know. You're going to look at, obviously, take a look at Bitcoin and NQ. Want to look back over Vert AI and Credi, which I was talking about last week, STX as well, but also Axon DAO's token, which is something that's had a lot of interest from me recently. A few of you reached out on Twitter asking if I could cover that today, so I did promise that I would. So let's take a look at AXGT as well. Like I said, these are just things that I'm invested in personally, or that my trading team have discovered and we've taken investments in. It's not telling you to invest in them. It's just saying where my portfolio is, why I'm interested in them as well. So just quickly in the questions, BC, from an educational perspective on Bitcoin, the last night's reversal was pretty much a drop, even on a 1 minute. It didn't really retrace into an FVG. I know it wasn't the weekend and you wouldn't be trading. But if you saw a pattern like that, how would you get involved? What would you do to even get involved? That's a brilliant question. So with this, quite simply, sometimes you just can't. Sometimes these moves are just so rapid. So from here, I was actually a little bit bearish here, right? Now, this was Sunday, it was coming into the afternoon, we hit this, and then we came back down, we closed this, and it was about 9 o'clock here, so for the start of this candle. When we saw this rejection here, I was speaking to a couple of traders that work with me and said, ultimately, what I want to see here is price closing below this, right? The up close candle here. While this is kind of holding, we also had support from this. Right, we were just kind of holding this area. The whole point of when we closed above this here was looking for the retest of this area to long it, but we'd already taken range high, so we then need to see a breakout. Then basically what happened is we then got this large bullish engulfing candle that basically then set this as a bullish order block, right? So then price closed above here, closed outside the range. So what do we want to do in those scenarios? Well, in those scenarios, we want to be looking for a retest of this, yeah? Right, so we're just going to pop that there for a second. Now, from the 4-hour chart, what I do here, and let's remember that this was 1 o'clock in the morning, so I wasn't involved in this. But seeing this move above here, the close above here, I normally look for one of two things. If I want a confirmed breakout, remember, if we just take the volume side of it away, but you can still look at that here on the 4-hour, all right? Nice breakout, because look, volume candles all pumping up. I really had a lot of confidence in this, right? Full disclosure, I never lie to you guys. Look, ultimately, being wrong in these markets teaches you a lot more than being right. And ultimately, overall, it's about being profitable. So we had that. We had rising volume. We had everything coming up. It was looking beautiful. We reacted down here, as I said before, with this bullish gap, which is why I was pumped for this move higher intraday. Made a lot of sense to attack these highs. Now, after the breakout, let's take a look at 1 o'clock in the morning. I favor a 15-minute chart here, right? So here we are, 1 o'clock in the morning. First of all, remember what I told you about patterns, right? This for me, and okay, I'm probably a bit looser than this with some traders, but this for me is an evening star. Large bullish expansion candle, doji candle, kind of more a little bit like a bearish pin bar here with a long nose, which I'm happy to accept these, right? Because there's another, that's a much more classic morning star pattern over here, right? This one really is large expansion candle, basically gravestone doji almost, but that then large bearish candle down, close below the 50% of the body, and then look how price sells off, all right? This kind of another example here, large bearish candle, doji candle, large expansion leads to the move higher. So anyway, this candle here. Now, remember what I said, I'm not just going to be bullish, right? I need a reason to be bullish. So this example over here, we rejected a range higher. Yeah, we got the evening star pattern, which is bearish, right? 3-candle pattern. I'll do something on this for you guys actually, so you can study it. Looking at that, things like 3 black clothes, 3 white soldiers, etc. I used to do a lot on traditional candlestick patterns and single candlesticks, which I'll bring back, because in these kind of moments here, these are some of my favorite entries. Why? Because once we get the close of this candle here, I'm normally looking to just market enter. I know where I'm wrong, right? Risk is above here. And then obviously just looking to short this down, right? And I would be always looking for the low of the range, yeah? So both of these, really kind of looking at the inside bar low as well, but something that we always take into consideration here, right, is the 50% of the range. And now, while we didn't get down to this here, like I said as well, that would be a target for me. Obviously, by the time you even get anywhere close to that, by the way, is a really good target. This isn't a bad place to mitigate. Oh, right. If you're intraday, probably a bit close here because it's a low within a gap. But I'm just looking for these inefficiencies. But ultimately, I'm looking for equal lows, smooth lows, these untapped levels here, trend line liquidity, basically. So by the time you get down here, fine. Of course, you're holding runners for here and you're holding runners for range low. But if you're not taking anything off by the time you get to 4.6R, you've either got massive cojones and a really, really good trading system that's based on super normal returns, or you're probably costing yourself a little bit. So anyway, saw this pattern here, right, Craig? So that for me, there's nothing bullish about this. We need to see the close above. Remember I said it was 1 a.m., right? So that's this candle's close here. So then what I'm saying to myself is this. This is the high of the breakout, yeah? So what I want to see here, let me just do this quickly just for a bit of effect. Right, what I want to see when the high is here, look, if that high of the breakout, if that's the real breakout, how do I know? Well, you never really know, but what would I be looking for? The same way when this poked its head above, I wanted to see price do this and give me an indication it's willing to move. So same with this. Tested this level above this one, and then when we establish ourselves above this high, this should then become support. I've then got a clear area for risk under here, yeah, meaning that I can take longs above here, and then I know where I'm wrong below here. So that's what I would look for there. In terms of the breakdown, let me just get rid of this for a moment. In terms of the breakdown, then really simply, again, it would have been too late for me. However, when price came back within the range, I think we were pretty much too late for that anyway, because let's not forget, if we're looking at this, you're basing it on a 4-hour move, right? Price didn't close back down here, so your first tradable candle was here at 5 a.m. If you were looking at it on the hourly, which is a little bit aggressive, but fair enough, there's a couple of things I was looking at here on the hourly. One was this balanced price range. All right, what does that mean? Well, you've got a bearish gap closed through with a bullish gap. That means that I'm expecting this area here. Let me make that a bit darker, actually. Expecting this area here to offer support. So when we close below it here, right, I'm then saying, okay, fair enough. It's kind of given up on this area here. We have a bullish gap holding here. So then we want to see this hold. And when we close below that here, the expectation is that price is heading to sweep out these lows and take out this. Within this, mate, I really wouldn't have seen, even if I was trading this at 4 a.m., I really wouldn't have seen many ways to enter this until the move had pretty much gone. By that point, you're below the midline, which we lined out here, right? There's your 50%. And actually, if we draw that across just quickly, it's doing a really good job of this interior range, the midline here, of keeping price suppressed. So for recoveries, what I'm looking for now, so to answer your question, mate, very difficult to catch those moves. You're much better off waiting for price action to settle. And then from there, trying to make your plan, right? So like for now, what do I want to do? Well, I certainly don't want to be chasing this from here. Yeah, so like I said, I either need to see price do what we talked about before, reinvert these gaps from here, get back above. In doing so, as long as we leave that little gap in here, watch that to be inverted as well. Price to draw back to them, those areas to become support, and then price to push up. All right, so at the moment, this is really giving us some good liquidity pools, but mostly intraday. I would really want to be looking at price sweeping out these levels down here before moving into any potential long positions. Okay, so let's pop over and take a quick look at ETH, shall we? Let's go over to our crypto charts, all right? See what we've been joshing on about for the last few weeks, what we've been looking at. Has it been playing out? Again, a pure area of consolidation here. This was the area we were looking to be buyers. Well, it's the area that we have been buyers, actually. There's been a lot of trades going out on this, and one of my favorites from my boy Raz, Resume, wonderful trader, great volume trader, real technological mind as well. We were just waiting for ages, right? When ETH came down to here, yeah, 2,127 flat. When we saw this move lower, we were so excited to long this back to the highs because we've been waiting for these to be swept out, waiting for this low to be taken. Never did it. We got some intraday longs off of this, yeah, and some swings that got stopped out, I think, after T1, maybe even at a loss. Then price closed below this level, and then look how important these levels become, these key liquidity points, yeah. Key low, equal lows, triple equal low. Price sweeps this out, close below, resistance, price goes below. We're now back above this level here, meaning that this level, as I'm looking at it, becomes a nice area of support. So if we make an allowance for that, right? And let's just zoom in for a minute. Remember, we're on the weekly scale here. Very similar to Bitcoin. We have a weekly bullish gap below us. I think that's a great place for price to just draw into, cool off a little bit, reset. All right, I imagine a lot of the indicators are starting, not on a weekly, obviously, but on the other time scales are starting to pop off into oversold at the moment, meaning that we can see a nice reset of the oscillators. Price come back down, looking for, like I said, 2,127 level to offer support, or anything starting from 2,336, which is the top of our bullish gap. So for price to draw into this area here, and then ultimately come back, take out this, and then just step our way back up. Right now, I'm not really looking to rush into anything. Just want to see how the markets trade out. Like we say, we need to understand the risk for the week ahead. as well, which is something that we're going to cover shortly as we look at the news for this week. All right, so on the daily, we can see price just having a little pullback here. Let me just tidy this up. In fact, let's just get rid of those here and we'll do it again from fresh. Right, so we know we've got the weekly gap below us here, right? Remember, this candle is what helps form the weekly gap, right? Because that's Sunday's close. So as we're looking here, price is now drawing down quite nicely. We've got inefficiencies here on a daily scale, but again, still looking at this in the same way that we were looking down here. We're looking for these key inversions, resistance to become support, yeah, as it did with this, which offered all the way along here. But since this consolidation here, we just had such a mad expansion. Makes sense for price to be cooling off here a little bit. Now we'll look at this closer on the 4 hour, but you know, if we're looking at it like this, and this is focusing on the bodies, yeah, wicks and bodies. So typically if you're drawing these, and I remember learning this from Tone Base in my really early days as well, you know, just either anchor to the wicks, and if you're just using wicks, just stick to using wicks, or, you know, just make sure you're respecting the bodies. Otherwise, you can just draw the damn line wherever you want. I quite like to anchor to a wick like that, for example, and then I want to find the kind of line of best fit. So I've got all this data, so I can see that's been stopped there. And I've got all this data here, right? So move up to there and I can see that. So we've now got this falling wedge here, which will look even more prominent on the 4 hour. Again, there's a higher probability that this breaks to the upside. And if it does, we look for retests of this area to get long. Yeah, apart from that, and we're just going to look at this on the 4 hour, we've now got this nice down close candle forming here. If this daily candle closes like this, then this is the area that I want to see price breaking out from. This would be the first kind of, or the initial point. I'm going to do it as a dotted line because it's not confirmed yet. It would be the down close candle. I'd ideally like to see it dip into this liquidity pool, close above this, and then use this area here once closed above at 2,498.32. Look at that area there to then start building some long positions. Apart from that, I think it's quite natural to see price pulling back here. We've got our downside targets. Am I looking to actively short this? No, I'm not. I'm looking for this to draw back to areas that, you know, we can look to buy. Ultimately, capital flow, interest rates, inflation, GDP coming in from the US, economic data is all relatively healthy at the moment. So, yeah, I don't want to fight that in the market. There'll be plenty of time, trust me. There'll be a nuclear winter of a bear market coming up at some point. So, you know, while you've got the bullish conditions here, don't talk yourself out of them. So let's take a look at the 4 hour. Right now, if we're looking at this here, you can see on the 4 hour, the inside bar looks a little, the falling wedge looks a little bit messier, right? So as we're looking at this here, we can see the deviations, price steps back in. But actually, sometimes, you know, you can garner a lot from this. Yeah. So we've done this on the daily by anchoring them. So when price came back into this area, look what happened. Price came out, did it, and remember what I said before about the rules of looking at these breakouts. If I'm looking for the first area that breaks out, so this high, I then wanted to see that to get some continuation. We didn't get that, right? When we broke out and left this high here, did price come down, retest, and do that? It didn't, right? So it kept us out. Same with this low, right? Price came out of this low. What happened? Set the low. Did it close below it? Retest it to go lower? No, it didn't. Didn't do the same with this low here, right? Even this one, when it popped out, look, price wicking below. It's not able to close. So now, looking at this as it is, we've got a key low here. If price breaks down on the retest of this and we get this, then I'm looking to trade it lower into the gap, all right? And I'm just looking down here, looking at all these inefficiencies and saying, okay, what was the higher time frame level? Yeah, this. So this is the area that we look to trade it down to. Until I get that, not really interested. This, as far as I'm concerned at the moment, is looking like a deviation. So any moves like this, yeah, can be really, really good to trade. If not, and ultimately, if this is your higher time frame that you're looking at, then you can adjust these levels to make sure that they fit, right? So if you're trading this on the 4 hour, I would probably adjust it to be something like that. I think that's really clean. So you've got it on the upside wick here. Down there, respecting the bodies. I'm doing it on this one here. Yeah, I actually quite like that. You know, you can extend it out to this, of course you can, but as you know, if we had this before this data here, we can see that nice rejection. So, you know, however you're doing it, realistically, I try and keep these on a higher time frame. So if I'm doing this intraday, I would focus on the 4 hour. If I was doing it on the daily, yeah, then I would be doing it, you know, on the daily and then moving down to something like an hourly to trade it. Yeah. And we can see again, breakout didn't come above that high, breakout didn't come above that high, breakouts here or breakdowns didn't come below that low, or that low. So again, looking at it here, marking up our low, break down below that retest, and then we look to sell off. Okay, so at the moment, ETH, yeah, can see this kind of drawing back down. But if this is a failed breakout, look at all of these deviations. Yeah. Look at what happened every time we got these deviations. Yeah. Once price comes back in, it's targeting the other side. So the real secret sauce is if we get a deviation down here and then a strong breakout here, you know that's what we're looking for, because that's a failed breakdown of the wedge. Price then comes back in the range, expansion to the wedge high, breakout of this. We look for that high to be set like we did over here, but we never used. Then we look at this to become the base for price to push higher. All right, that's how I would be looking at Ethereum at the moment. The pattern is just so, I think it's very, very clean in my opinion anyway. So let me just have a look at this quickly. Right, I want to take a look at a few other assets with you. I actually want to start by taking a look at Axon DAO. So really, really good community over there. A lot of people kind of contacted me about this one. And, you know, like I said, full disclosure, I've been invested in this for quite some time. All right. And it's really back at a key level. That's all I'm really interested in showing you guys with these. All right. Look, I'm an intraday trader. That's how I make my money. I'm also a swing trader. That's how I pay my bills. It's how I've earned my living for over 5-6 years now, right? I'm a pretty good crypto investor. I'm a much better traditional market investor, but I have an amazing team around me who keep me up to date with these things. So when they say to me, look, this is what looks really good about the project, research this, here's the white paper, these are the key elements, this is the team behind it, this is the community, etc. That's what then gets me excited. It's what got me into credit, it's what got me into alchemy, it's what got me into all of these really early stages. Floki, for example, I mean, Jesus, there are very few people earlier into Floki than we were. But, you know, I'm not a gem hunter. I have other people that do that for me. I'm looking for the FA to cross over with the TA so that we get those quite nice little areas and entries. Sorry, let me just take a very, very quick look back. I have missed a lot of questions here. Do I trade the inside? We take a look at the 15-minute. Yeah, let me pop back to that at the end. NBA Young Believer, remind me if I forget. Pepe and Soul, of course we can. I'm going to smash into Soul anyway, but of course we'll find time for our favourite little frog meme. Birds in the background keep making me think bird in my house. Awesome. Yeah, no, it's quite nice actually. Moved just outside of London not too long ago, doing up a nice property along the beach here, and that's where the office is now. So nice and lots of birds kicking up. It's 30 minutes into central London from here, which is really nice. You've got a beach just outside, which the husky absolutely loves. Also a little bit of woodland as well. Jojo, how are you doing, my friend? We've missed you on the shows. I hope you're keeping well. Absolutely just sitting and waiting too, Craig. That's a really good plan. So with Axon DAO, right? So this is AXGT, this on Rapti. You can find it here on this ticker, all right, or you can find it on things like DexScreener, etc. This for me was a really key area. We had this consolidation here before this massive pop. Price then, as it does with these tokens, you know, and these projects, grinds its way back down. We see the kind of bear market conditions, ultimately just following the same technical plans that we've talked about before. Here's the expansion off the lows, right, into a bullish gap. If you're somebody that wants to look at this from a point of view with volume as well, right? We can see flat volume coming into all of this. Then we had this nice pop here, right? Then look at this one here. We started seeing volume die down. Then we started to get this little uptick coming into here. So we can see here that we've got relatively flat volume at the moment, but it is down in an area that I'm really interested in. It's just a really great buy zone, this, all right? First place that bought it up here, bought some more of it again here, holding all the way through this, haven't got rid of absolutely any of it, and just added more here as well. Ultimately, we're going to make a run on these highs at some point. When all the stars align, we've got a really, really nice upside, even from where price is today. back to the all-time high up here, you're 780%. And I really do think that it can surpass that just based on a number of different things. But you really should kind of make sure that you're looking into the fundamentals, that you're doing your due diligence on these projects as well. I don't like investing in anything. Even the chart can look like the most technically amazing chart in the world. I don't care what the ticker is if I'm day trading it, but I absolutely do if I'm investing in it. I'm not going to put my money in anything just because I think that it's going to pump or it's going to go anywhere. My long-term investment portfolio is exactly that, right? Look, I've been holding this since the summer last year, right? And I have no intention until we're getting anywhere near these areas of taking anything off of it. It's just a good place to add. So what are we looking for down here? Well, I think we've seen the kind of first early stage of the resurgence here, right? So basically, what does that look like? Well, what have we been getting here? Down close candles, yeah. What happens? Closing below the up close candles, yeah, or the bullish candles. Look how these areas, when we close below them, are just smashing price lower, yeah. Look at it. Yeah, candles, close below, retest. Look at the wicks into this area, rejection. Close below this, retest, sells off. Close below this, retest, sells off, retest, still selling off, right? This is the first point at which we can see that price has not respected the bullish candles here. Yeah, and is now set a bearish candle and closed above it. So this is an area that I want to see hold. I want to see price back above it. And in an ideal world, I want to see price above this one here as well. Close above this one here, and I've got even more belief that this is really the bottom for this here, and this is coming in. It's also kind of got a little bit of a rounded nature as it's coming in, which I really like to see. So as we move this onto a daily scale, we can see we had that nice little pop, right? Obviously, like any of these tokens in this environment, Bitcoin included, we are going to see some very news related as well. The market's going to panic. People not feeling overly comfortable at the moment. The tariffs still aren't fully resolved. There is obviously this issue that interest rates are still quite high, which is reducing people's borrowing. You've still got a little bit of uncertainty in the markets, which markets really, really, really hate. So ultimately these markets in their very nature based on the human psychology, which is why candlestick charts or Japanese candlestick charts and other charts teach us so much about trading and so much about human psychology just within trading, because this is everything you see on here is a factual print of what happened. So we saw this initial expansion. This area is holding. It's continuing to hold through here. We saw another expansion here. We're now back down at this level. A lot of people look at this and think like, yeah, we keep trying to pump, but actually it's failing. I'd look at it the other way. I would say this is pumping into a market that's very, very eager to reject at the moment. But actually, look, this area here is really holding. This is showing me that there's buyers gearing up here. I would need to see this area here close below. And even then, I'd be looking to see what happens at these lows. This low here at 0.0830 is really key for me. I think we wick into that and we can have a big recovery. But from a technical standpoint, I really, really like this. Again, as I said, on the weekly scale, we've seen that kind of resurgence. We're now seeing something similar here after the big sell-off, right? It's nothing to just, you're not just looking at this and going like, oh, wow, this thing's going to moon for me because we closed above one black candle, or, bearish or a down close candle. But ultimately, look at what we're seeing here. Let's read the candles as well. Look, big body bearish candle, bearish pin bar or inverse hammer, another big body candle here, another big body candle here, bearish pin bar here as well. Then we get a very small engulfing. It takes over that. Then a doji candle. Normally, these mean that we're seeing indecision, right? If you look at most of these points here, that price has some kind of change. Apart from that, doji candle here, corrective move, doji candle, price pumps. What's going on? Price pumping here, doji candle here, pin bar, price comes lower, right? These candles really pop themselves up at any point of kind of indecision, consolidation, and ultimately reversals. So as we're looking at this here, we get the close above. Now price is dipping into this area here. This is what we want to see hold and price to make its way above here. Not seeing any inefficiencies until we get up here to 0.1250. So on an intraday basis, I think this could provide a really good platform to move higher. But let's not forget what I'm really focused on here is this being the bottom and price moving higher. Look, what if I'm wrong? Well, if I'm wrong, I can add below here when I get the necessary signals, right? Because, if I'm in here, and obviously remember, this is much more of an investment than looking at this from a hard stop perspective, but you should always know and understand your risk, right? Yeah, so from here, well, if we just move a little bit lower, let's say we come back down to this level, we wick down, we reclaim this area here, well, then I'm just going to do this, right? And I'm just going to compound that position and pyramid that position higher. You know, what real benefit is there to me shorting this on a higher time frame? What, to come down into here when your risk has to be up here somewhere or up here? Just doesn't make sense to me. I think if we get the resurgence in the market that we're looking for, then I think we can be in really, really good shape with projects like this. So just want to take a look at a quick couple of others. Probably not going to get around to Credit and Vert, but we can take a look at those on Wednesday when we do our alt show. I did say that we would take a look at Solana. Yeah, and then we're going to finish up on Pepe as well. Shay, apologies if I'm mispronouncing. Yeah, apologies, man. I don't know why we do seem to get that lag coming across onto YouTube at the moment, which is a bit of a pain in the bum, but hopefully it's not affecting you too badly, my friend. Apologies if it is. So again, right, this was a really key pivot for me. Resistance, turn support all the way through here. You look at the wicks coming into this area being gobbled up by the buyers. And we got it again, except we got a little deviation of this low. Look how price closed below, tricked us all. I thought when we closed below here, we retest this, and then we moved down into these lows. We didn't, but never fear. I know it looks a bit messy, but this will make a bit more sense on the daily. Yeah, so for now, actually, let's just do this. Yeah, so as we see it here, we came into this level. I know I just got rid of the SR as well, but don't worry about that. We saw price quickly recover this here. And again, right, I know I sound like a broken record, but if we're waiting for confirmation, here's the down close candles, price closed above, look for this area to hold, and then we're pushing up. Now, I think, as we're seeing with a lot, we're just inside this bullish gap here on a weekly scale, which is obviously pretty bullish, We've had this kind of shifting structure here. I know we've come off a lower low, and this is kind of an internal high. We have seen expansion here now, which I really look for. So on Solana, I'm just looking for this area to hold. Actually topped up with some of this, where was it? Here, end of April, boom, here, right? Close above, added a little bit more here for the breakout, would have added some more here, did add down here as well. Just getting ready, fired up. I think Sol's going to have a big run here, and, obviously just keeping that powder dry to deploy into some more Solana projects as well. So things looking good on the weekly. Now let me just run back and we'll get our daily information on there and show you what I was looking at here. So we can see what we've been looking at all the way through, all these beautiful colorful charts. We love to see liquidity sweeps, inversions, and then order blocks being set. These typically make up our bottoms, or our interim tops or major tops. Here, we haven't seen that expansion to the lows, right? Which for me is actually quite positive. I was bullish here because we came up, look, key point of resistance here, equal highs up here in this gap. Price came into this level. When we closed above it, set in the order block, I said, I want to see price hold this level here on a retest, and up we go. What happens? We close below it, and especially on this candle here, this then gave us an indication that price was ready to move lower. Yeah, so if we spot these out, here we are, broke down, price coming back, retesting this, and we are selling off. Now, as we look at this here, we have got this nice daily gap down here as well, which is holding price. So what do I want to see? Well, I actually want to see price back above this level here at 173.22 on a daily scale. This is obviously still a key high. We could wait for confirmation of that as well to move up. But at the moment, this is just a healthy retrace, in my opinion. I don't see any major news. Well, I mean, I say that. Obviously, we will check. So this is saying altcoins retreat amid macro volatility following US credit rating cut. So so for those of you that don't know, basically, there's one group downgraded the US credit from like AAA down to AA plus. It's all semantics, really. It's happened a few times in the past. It's just to do with their debt ratio. But yeah, I think we all know that US is probably unlikely to default. If it does, then everything is screwed, right? So just so you know that. But the market's just kind of reacting to that as we look. We see that washing through into risk markets here in the indexes, NASDAQ, S&P 500, Dow Jones, all down on the day, all right? See strong gold, heightened volatility index, all right? DXY just kind of does whatever it wants at the moment. We're looking at oil here as well. We're not covering that today, but there's different drivers for that as well when we look at things like OPEC. But yeah, that's where we are. We can also see it when we look at these, right? USDT dominance here, which is pumping. So little key indicators here that we're just seeing that corrective move. When things start to turn, however, we want to be positioned and ready. And this gap here on a daily scale and this consolidation here are the key areas that I'm looking for, all right? So that's really where I am on Sol. If I was looking to be any more aggressive with this, then it would be this. And this would be more intraday plays here because we've got a bearish gap here on the 4 hour. Close above here, look for this area here to hold, and then look to target some longs, but still always remembering, right, that on a daily scale, we need to really recover some key levels. So for me, you know, this here leaves a nice down close candle. If price closes back above here, then I'm looking for this area to hold as a base for support. Would I consider taking long positions from here? Yeah, I think so. You know, I think ultimately it's a good area. If we put our Fibonacci on this, we look at the recent expansion higher, you could take it from here, or some people might take it from there. I'm happy with this. We've had the corrective move down. This is the expansion leg higher. If I move that, and then looking at how we get confluence here from our golden pocket, I think a little bit of a deeper move into here. If I get any really nice kind of like hourly setups in there, then I think I'd be happy to trade that higher in terms of a short-term swing perspective, or certainly in terms of looking to build intraday positions. All right. Another good, hey, cheers, Craigie boy. You are Chelsea Flower Show Wednesday. Yeah, awesome. Oh, great, you're off to that. Always reminds me of my Dutch friends and their amazing flower markets, you know, with all the tulips and bits and pieces. But it really, really is a good, it really, really is a good day out there. So have a lot of fun, my friend. So, and I did say we would take a quick look at Pepe as well, didn't I? Let's take a look on this. I don't know if we've done anything on Pepe in a while. We certainly have. So again, we can see magic box holding, crazy lines on chart doing their thing. Just remember, right? But I get this a lot. People say, "Oh, TA, you can't predict the future." I mean, you can't help some people. This is all factual. This is purely what's happened from the prints. This is as factual can get. So, you know, human psychology doesn't really change, right? That's why we look at these areas and we say, oh, okay, you know, where was this consolidation before this massive pump? And what effect has this had on price since we've been in it? Let's have a look. Oh, okay. So this kind of whole area holds. I know that seems like it's really simplifying it, but, you know, you got to always give a shout out and a little bit of a dig to the reply guys who offer absolutely nothing to this space. Technical analysis works because we overlay it with a number of other factors. We're not expecting price to just magically do things because there's boxes or lines on a chart. We're studying the human psychology that goes into leaving these candlestick patterns, and we're trading that psychology, all right, aligned with a lot of other macroeconomic data and fundamental analysis. So as you see a large expansion like this, nice little doji candle showing us it's time for probably price to just chill out for a little bit after this beautiful expansion higher. We've been held in this bearish gap here. I said that I want to see key expansion above this high, which we got, and then I want to see us close above this really to start driving higher. Do we expect to do that in one go? No. All right. Doesn't have to. So let's just look for something like that. Yeah. Just weekly sale, really, really key here. This is obviously the area that's capping the market through here. So let's see a nice little run through of that. Another key level you want to look at is this. Why is this level key? We'll look for these key lows, right? Low here, price closed below it. Look at the perfect retest, sold off. Coming to this area again, why is it key? Because buyers were here. That was the low where buyers stepped in. So think of the liquidity stops being below this. This area then got attacked, closed below, mitigation, right? Sell off. Back to this level here. Let's get back above that, invert this gap, and then I think it's clear air ahead for Pepe. On a more aggressive approach, we don't really have anything else because I would want to see this close above here, giving us a bullish order block. Yeah. And we can see what's happening here. Price is kind of held in this red box. I think it makes sense. I mean, we did see a nice little reaction from here, right, on the bullish scale. So if we look at that, that's that bullish gap here. Price has seen that initial reaction. It's just not enough here. Yes, we're super bullish here. So it's great to take longs from there, maybe short-term swings intraday. You could have caught one there over the weekend. But for me, I want to see a little bit more. I think we could just draw deeper into this lower inefficiency here, overlaying that with the weekly scale. So I'll be looking for price to pull back to here to get long or to close up above this area here, which is 0.4001440. Do love all the numbers you get to play with Pepe. Now, one last thing. I know it's not the sexy side that you all want to do, but it is very, very important. let's take a look at the week ahead from a news perspective. All right, key economic data that is affecting the US markets, the largest markets in the world, that, as we can see with what's happening everywhere, because the dollar is the world's reserve currency, and because of the weight of trade, investment, money, services, everything that the US put into the world. That's why that is the most important, not to inflate the egos, which can already be quite large of my American friends. Love you all. But that's the fact of it. All right. So that's why we look at the US markets. I do study China very closely now as well. You know, they're really the biggest thing to come up and challenge the US, but it's not quite there yet. Now, what we can see here is if you're trading FX, great. I'm not going to go through that today. I know we don't have a lot of FX traders here. In fact, the almost 3,500-4,000 of you that are live today, I bet there's not really quite a lot. So as we're looking at this in here, we can see we've got news coming all the way through. We've got, you know, Canada, Swiss, we've got Australian, European, GBP, which is the UK, obviously, or Britain. Then we got to go all the way through here till Thursday, till we've got our unemployment claims, flash manufacturing PMI, flash services PMI. Then we've got existing home sales. This is important because, again, it's showing you, are people buying, are people managing to maneuver in these kind of still relatively high interest rate environments. And then retail sales, oh no, sorry, that's in New Zealand. So watching these key drivers come through on Thursday, and then new home sales on Friday. What does that mean to me? Means to me there's not really a lot of news catalysts that come into the week, right? We've not got PPI, we've not got CPI, we've not got, you know, Powell speaking, right, for example. So what we want to do is just, we can navigate our way through this week. Hopefully what we're seeing here is Monday, maybe into Tuesday. Monday sets the range for the week. Tuesday, I think we see that consolidation potentially continue as we start to break out into the middle of the week, running it into that news on Thursday. Which happens to be my birthday, actually, May the 22nd. So hopefully that doesn't screw the markets up. Otherwise it will, you know, make the little barbecue garden party a little bit, you know, sour on the palate, but I don't really think that it will. Horace, hello, mate. Long time. What did I miss? New all-time high? Oh, back in the bin. I think, my friend, let's just very quickly for you pop ourselves back to the Bitcoin chart, because I know NBA Young Believe asked me for my opinion quickly on the 15-minute as well. So in here, mate, this is really where we are. These are to do with the volume. Just so you don't think there's some random lines drawn up on my chart, just saying when we saw this beautiful breakout here, look how we saw the increase in volume from these candles. Not just the big breakout candle, obviously that's a big mother, the same way that this one was here, but how we saw the decreasing volume here. So I was saying the deviation of the range higher yesterday was really key. We're in this mother bar pattern at the moment, which is basically just a consolidation range. Real play I'd like to see is this. Price sweep out the lows of the mother bar, maybe come back down here, touch around about 100k. Yeah, we haven't retested the 100k here since we broke out. Markets love round numbers like that. So if we hold this level here, I think we have this nice pump. Ultimately, either that, or we need to see price break out above 105.834.5 here on OKX. Then I think we can really move. All right, legends, it is always a pleasure to be here live with you. For those of you who are members with me over at the Bird Nest, then please do pop over there. We'll see you there for the rest of the day. Do drop me a follow on Twitter. I'm trying to get as much stuff out to you guys as you can. It's all obviously for free as well. So please do pop by, say hello. Let me just show you. That is where you can find me. Pop along, say hello, let me know what you think. What content you want to see. And remember that Wednesday we're going to be live again at 1100 UTC for our Alt Request Wednesday. That's when we're going to take a look at all these updates we've been planning out throughout the week. Like I said, expecting some potentially good moves there as well. And do keep an eye out. I think Tuesday, Wednesday, we'll have the pleasure of being on Crypto Town Hall again with some bright minds like Follis, Dave over there, who's just a wonderful traditional market guy, as well as obviously the legend Scott Milkier himself. So apart from that, I'll catch you legends on Wednesday. Have a fantastic week. Trade safe. And I look forward to seeing you all around the nest.